Good morning again, and a warm welcome to all viewers and listeners of this webinar, which will be recorded. My name is Britta Bonev. I'm the Head of Sales and Marketing at MDO, and will spend the next 30 minutes with you and my panelists to discuss the landscape of the third-party management company, past, present, and future. To start, let me first introduce you to my panelists. First of all, we have Derek Delaney, who is Global Chief Executive Officer of DMS. Secondly, we have Martin Vogel, CEO of MDO Management Company and European CEO of DMS. And last but not least, we have Cyril Delamarre, who is CEO of Montlake. The third-party management company market has changed significantly over the past few years and still continues to move. We have seen a trend for consolidation in the market, and this summer, DMS, MDO, and Montlake have decided to join forces, bearing in mind that the Montlake merger is still pending regulatory approval. Derek, can you tell us what was the rationale for bringing the three companies together?
Absolutely, Britta. The way we look at these things is always from our client's perspective. And we mainly bring our clients in from DMS, from the US to Europe. And when they're coming in, they like to look at Europe as one market. And they don't have their thought process broken down into UCITS and into AIF. And we just want to be able to tell them we have the solution. When they come looking for that, they're not able to wait for a company to get the appropriate licenses, get the people, get the expertise. And we'd never be comfortable representing ourselves to our clients as expert in an area where we're not expert. So rather than look to bolt on UCIT experience and rather than look to bolt on Luxembourg experience, we looked to find our peers that were best in the market in those areas and to see could we bring ourselves together to one group so that we're able to say to those clients, yes, whatever you need, don't mind if it's Ireland, UK, Luxembourg, don't mind if it's A for UCITS, we have this for you, we're able to fix it, we're experienced in it. And that was the very simple logic for it from my perspective.
Thanks, Derek. And Martin, what was the motive behind MDO joining forces with DMS and Montlake?
Yes, thank you, Britta, and a warm welcome from my side to everybody as well. I think I just want to add what Derek has already said, and I think this, of course, is also valid for us. But I think from an MDO point of view, we had 10 very good years. We were growing nicely. We all were in a rather comfortable environment, and I thought it's probably also for the company time to get a little bit of kick to adapt to new challenges, to get to the next level of expertise and know-how. So I thought we also tried to get the foothold in Ireland. We did not manage, very similar reasons. We didn't have the required credibility locally. We also lost some client pitches on the REF space because we were probably not able to show the core expertise in that area from our side. So I think that the reasoning of ensuring that there was a certain change to the company combined with being able to enlarge the offering to what we can do to our existing and potential new client base, I think that was a key driver. The second key driver is, and I think we have seen in the past, as Britta mentioned in the beginning, the market is moving. There are AIF administrators moving into the market. There are private equity houses moving into the market. people joined together. I was strongly believing that you have to do something to keep up. If you don't do anything, you will be rolled over by others. And I think what we have found now with our new partners and friends, that is a very strong client offering that we can do now in all jurisdictions across Europe.
Thanks, Martin. And now to you, Cyril. Why has Montlake decided to come together with DMS and MDO?
Thank you, Britta. Good morning, everyone. It really, in terms of Montlake, we spent the last 10 years building a successful offering in the platform world, and specifically in the alternative UCITS platform world, where we probably became one of the leading platforms out there, or at least one of the biggest offerings that you can have in the marketplace. And it is a great business, and it is something that is continuing to grow very aggressively. That being said, as we were looking at the market, we saw that there were opportunities to expand, and really kind of the market was evolving towards multi-jurisdictions, so being able to offer fund managers access to Luxembourg structures, UK structures, and others was becoming an important factor. I think the platform business is a great business, but being as a ManCo, you want to be able to have a wider offering and being able to service your clients in all of their needs. One of the big things that we've seen over the years really kind of become clear to us was the fact that from an investor standpoint, investors have looked more and more at local funds. And if you look at the UK, for example, many investors would allocate to domestic funds. And up until now, we were not able to offer those. So kind of being there to have a wider set of services, a wide knowledge base was really something that we wanted to build within Montlake. And through the discussions that we started having with Derek and Martin, it was important. It became apparent to us that there was a match, and that there was really a something interesting to build within the DMS group, and basically build a European champion, which was really the key for us when you try to answer really both on the one side the demands from your fund managers, which want to create the best structure for the investors, and investors on the other hand, which they don't really care. They want to be allocating money, and they want those money to be at work. So you have to make sure that the optimal structure is always in place for them. And that's so being able to be part of a larger group enables us to do that even better than before.
Thank you, Cyril. Staying now with a third-party management company, we all know that regulation has changed, client needs have changed, and things continue to evolve. Martin, in your view, how has the market developed over the last years?
Yeah, I mean, I said that previously in similar occasions. I mean, when I started the business 25 years ago, you had a Luxembourg fund and basically no substance locally. Everything was done at the domicile of the initiator. That has changed dramatically over the last 15, 20 years. We just also all listened to Claude Marks talking on the regulatory development in the future. I mean, today, when you look at today, and I think that also will move into tomorrow's world, the sheer number of areas where a responsibility, a duty, an obligation, a liability has been attributed to the ManCo has increased tremendously. I did say sometimes whenever ESMA does not know where to put the responsibility on, usually the ManCo is the place to choose. So today, when you look at the ecosystem of the fund industry, what a Manco independently, whether it's an in-house or a third-party Manco, has to do ranges from overseeing the portfolio manager, the distributor, the administrator, reporting issues, risk management issues, liquidity management issues, you name it. And I think here, when you ask me what the trend is today, to be a credible officer or the service officer in the market, you need size and people that have different expertises and know-how in different areas, IT systems that support that day-to-day activities, and experience and knowledge in a vast variety of areas. So I think today it's all about being able to cover all of these aspects to actually give the client the comfort level that his fund and his oversight and his risk management is in good hands. I do believe that this trend will continue. I always said many times there must be a consolidation in the market. I think we have seen a start of it, but this will certainly continue.
Thanks, Martin. And you, Derek, what changes have you seen in the Manco space?
But touching on what Martin spoke to, the increased change in regulation, the extra asks of the fund and the fund looking to put them to the management company. When you look at that from the client side, and you look at, say, over the last 4 years of a US or an Asian manager looking into Europe, they've had the request to start producing the need for Swiss rep and paying agent. Now the need for a UK domestic solution. They have the need for solvency reporting. And if you look to the increasing trend by European pensions towards separately managed accounts, you're seeing these are things that are very au fait to us. But when you're a US manager looking in, you just see that these are something you need for Europe, and you want your management company to just be able to solve those. So from our perspective, what we've looked to do is how can we solve for those? And this is the challenge for all Mancos. So something we've done that won't be right for every client is we've got in front of the trade. So if you look at the MiFID arm of the group, we will do the pre-trade, trade execution, verification, settlement, and follow that through to the best X reporting. And they need the policies regarding trade research, etc. And that's something that's very different in the US to how it's done for Europe, and that needs a solution. And to Martin's point around the regulator looking for the Manco to solve it, it's the same from the client side. So we just look to be ready to fill these extra demands as they come. And it's been the same in looking to bring into the group an excellent group oligo that does Swiss rep, because from a US manager perspective, again, they look at us as one autonomous market. And that was the initial goal of AIFMD, to actually create a pan-European autonomous market.
Thanks, Derek. And you, Cyril, what has changed in your view?
The regulation obviously is evolving very quickly. 10 years ago, when Montlake was set up, we not even a self-management company. Our first fund structure was self-managed in Ireland, and so there was a regulatory framework which was very different to what it is today, and that regulatory framework has evolved constantly. And on one side, you've got the regulatory framework that has evolved, and on the other side, you also have the knowledge of investors, which has kind of taken a focus more and more on what management companies are. A few years ago, I would talk to investors, and they would, I would tell them that I run a management company business, where we oversee fund structures, and we do risk management, compliance, oversight for fund managers, and really nobody really understood what that was all about. And over the years, I have seen more and more a change towards investors' view of management companies. Basically, integrating them to their operational due diligence, and that is a key thing. If you're looking to launch a fund in Europe and you're looking to go and raise money for investors, one of the key things is you want to make it as simple as possible, and hence the choice of your manco is really important. And this is why, you know, over the years we've seen higher degrees of regulations. Hence, you need more and more staff. You need more and more oversight. You've also seen, you know, more and more demand for distribution channels. You know, whether that's rebate agreements or platform access. All of that usually is better suited and readily available in bigger organizations, bigger mancos, which have the knowledge, have seen it before, will enable you to fast track yourself into these structures. And that has really been an evolution over the years that we've seen. And today, you know, I would say mancos receive more and more due diligence questionnaires from investors, which, to my knowledge at least, wasn't really the case a few years back. And I think that's a great thing from our perspective as management companies, because we are seen as an important part of the process for fund managers to allocate. So the more streamlined we can be, the more diverse in our offering and the better quality we can offer is paramount for allocators to be able to invest in products as quickly as possible.
So if focus on today, Cyril, I mean, what particular trends are standing out for you?
I think, you know, it'd be difficult as trends not to talk about the ever increasing responsibility kind of being put on management companies, and hence the importance for, you know, for strength and for knowledge. I think knowledge is an extremely important aspect. Today, you have to be able to navigate, you know, complex environments, and as Derek kind of said, fund managers, especially foreign fund managers out of Europe, when they look at us and they look at Europe, for them it's one market. So whether it's Ireland, it's Switzerland, it's Luxembourg, it's France, they think that we're going to know everything about it. And to a certain degree, they're right. We want to be able to take away that kind of complexity out of them. So really, one of the evolution of the management companies and the trends has been to support more and more the manager and really enable them to do what they're supposed to be doing, which is run the money, make money for their investors, and being able to go and talk to their allocators across Europe with our kind of, you know, oversight and making sure that the funds are doing what they're supposed to be doing, that they're safe, and at the same time that they can go and raise money in a compliant environment. So that's been really one big trend. And in some ways you have that big trend which has come up alongside another one, which has been pressure on fees from allocators and fund managers, kind of, you know, becoming, you know, more and more pressurized on their TER caps and on fee levels, whilst pressure is mounting on the duties and responsibilities that come onto management companies. So an interesting balance to manage, and I think the bigger you are, the more economies of scale you can manage, and hence, you know, continue to render a really good service at an appropriate price, which makes everybody competitive along the value chain.
Thanks, Cyril. Before we later on move on to the future, so still remaining today, Derek, do you see any other shift, any other trend in the market today?
Yeah, absolutely, Britta. And if you reflect on the past, what we would tell US managers that were considering Europe and worried about Europe, worried about AIFMD, we'd explain that AIFMD was envisaged to create a pan-European distribution platform similar to the US, and we'd explain that much like you register your fund and have your broker dealer approved in each separate US state, once that's done, in the EU, you'll be able to market your product, and one product should suffice across the EU. That hasn't transpired to be the case because of different gold plating in different markets, and some markets moving towards SMAs, some wanting fund for ones, and different local requirements around depot light versus depot, etc. Now, I don't say that as an assessment of the success of AIFMD. I say it more in terms of how that defines the challenge that we're seeing, and what we've ended up needing to do, looking across the whole group, is actually find more regional solutions than would have been envisaged under AIFMD. So, for example, DMS now manage funds in Spain. MDO, I believe, manage funds in France. And it's that need to be present in the local markets that we hadn't expected. So if you look at what do we see as a challenge, we see the need to be in those local markets. We've done that with the UK, where we became an ACD, so that we're able to present the separate solution for the UK. But we'll need to do that for Italy, Spain, Germany, and a lot of the larger markets. And then if the trend continues even further, we may need to be in the smaller markets as well.
Thanks, Derek. And Martin, in your opinion, what do we see today as a trend in the market?
Well, adding to what has been said, I think I see two trends. One is when UCITS and AIFMD came into place, a lot of the clients appointed a management company because that was the law. I don't think there was a lot of recognition about what is actually the added value. I think today the sophisticated players realize that they have a company there that helps them to professionally, diligently run a product, and ultimately helps investors to make safe and well-managed investments. So I think the level of recognition of the Manco has improved. A clear evidence of that is also that most people do RFPs today. That has not been the case in the past. You just chose somebody. So I think the level and the recognition of the value of a management company, generally speaking, has improved quite a lot. The second trend I see, in addition to what has been said, is who is actually opting for what solution. I think the threshold, when you think about do I do it on my own rather than do I outsource it, that is increasing continuously. We see today players, especially maybe players which are a little bit far away from the European asset management market, they clearly, strategically speaking, they ask the question, do I really have to do it myself, or am I not better off also with regard with my investors to actually have a professional counterparty doing so? So I think the threshold, and simply speaking, in the early days it was 300, 400, 500 million, then it moved up to maybe $1 billion. I think today, if you look at it from a pure economical, operational point of view, if you're not a really large asset manager, you probably have to ask yourself, and people do so, what is the right solution for me moving forward? Shall I undertake the problem and the work to do it myself, or shall I appoint a third party, like there are many in the market?
Thanks, Martin. If we now turn to the future, Derek, where would you see the third-party management company, let's say, in 5 to 10 years' time?
Yeah. If you look at the emergence of the management company It's akin to the emergence of alternative administration. If you go back 5-10 years, where you had the likes of Citco and others emerge, who became very significant institutional players in the administration market. And so the challenge to the management companies is to become the institutional peers of the administrator, of the auditor. And what qualifies becoming an institutional peer? It's having that track record and pedigree of having done it across 20, 30, 40 years. It's having done it successfully through various market challenges, gone through various iterations of UCITS, of AIFMD, and it's having significant scale. So if you look at the largest of the mancos now are typically still under 100 people in any given domicile, and you compare that to the administrators and the auditors who are always in the hundreds and sometimes into the thousands. It's a challenge to the industry as to whether we can consolidate, get to probably 10, maybe 15 large institutional competitors and peers that are akin to the administrators and the auditors in an institutional regard.
And Martin, any indication from your side where we are heading to?
I mean, I share the view completely. I think, you know, one of the big discrepancies I see is when I look at, again, the liability of a manco and our capitalization need from the regulatory point of view, there is a huge gap. We are ultimately responsible for many things, and most of the companies are very small. You know, they're 10, 15, 20, 30 people. I think that's a total mismatch. That's a mismatch from probably what the regulator expects a manco to do, from a financial mismatch about what you can actually carry with regard to responsibilities, and there is a mismatch on actually carrying out your day-to-day duties. So I think we will see, as Derek lined out, we will see what we have seen in the depository market, in the fund administration market, in the audit market. There will be a few strong players dominating the market. I cannot tell you whether this is a low two-digit number or a medium one, but we certainly will move away from the odd 500 manco in Luxembourg only and a similar amount in Ireland or in other locations. There will be a number of few players ideally servicing the market, giving high quality to clients. And again, maybe, you know, I should not say that here, but I mean, we want to be part of that group.
Thanks, Martin. And Cyril, where do you see the future of the third-party management company? Will technology play a role?
Yes, I think if you look at the industry today, the red thread here is very much multi-jurisdiction and knowledge and understanding how to service both investors and fund managers, and you know, all of that has to be underpinned in the generation in which we live with technology. But it has to be technology which is useful for the users, and that's one of the key challenging of our industry, is to be able to match, you know, regulatory compliance with technology, and how to make it, you know, smart, efficient for fund managers to launch funds faster, to have a better oversight of what is happening on the day-to-day in their products from a potential technology platform point of view. And that these are things that need to be taken into account over the next 5 years. I think technology will play an important part of the business, including, you know, for allocators who are looking to invest money into the funds that we oversee. If we can find ways to make it more streamlined, easier for them to manage, you know, whether it's the AML processes or or just the simple kind of interaction and typing between their bank account and our funds, then I think management companies who have a solution for that will make a big success, and hopefully, you know, will be market leaders, and that will be will be us.
Thank you very much for your valuable insight. Now, I think we have reached the end of our time. For all viewers and listeners, we have a virtual booth. So if anybody's interested, come and visit it. You can also post any questions. We're happy to take questions offline. And on that note, on behalf of all of us, thank you for your time to listen. And we wish you a very interesting virtual conference. And we very much look forward to seeing you next year, and hopefully in person. Thank you and goodbye for now.
Thank you, Britta.
Thank you. Thank you, Britta.
Thank you, gentlemen.